Welcome everyone to a new update, and today we'll cover everything you need to know about Deutsche Bank and Credit Suisse and whether or not it will be impacting the crypto markets, as that is the primary case right now for everyone and on social media. Before we're going to continue, make sure to hit that subscribe button to this YouTube channel and also like this YouTube update if you enjoy the content. If you also like what we do, we also have a trade letter with the latest altcoin setups, market information and market analysis. And we've got a premium membership which shows my personal trades, trade IDs and way more. In the past month, we have been able to generate plus 14R on our trade IDs, which means that you would be up 14% on a month if you'd risk 1% per trade. All can be tested for 1 week for free. But let's just jump into the topic of today. Lately, social media is getting overwhelmed with messages regarding the subject Deutsche Bank and Credit Suisse. And overall, the Deutsche Bank has been a topic of discussion for decades already, as it has been underperforming massively since the last crisis in 2008. However, Credit Suisse became hyped a lot on social media and a topic right now, as a ton of people are comparing this case towards Lehman in 2008, which was the biggest bank falling during that crisis. Are we on the edge of another bank falling apart? That is the question that we have here. The story itself unfolded due to a tweet from investing.com, which indicates that an investment bank is on the brink. From that perspective, social media and investors concluded that it should be Credit Suisse, which is quickly compared with Lehman and Deutsche Bank. In that scenario, we've also seen that credit default swaps on Credit Suisse started to run up quickly, as those have hit the highest number in 14 years, which you can see in the graphic next to me. What are credit default swaps? Those are basically insurances against a potential default of the underlying collateral. In this case, we can see it's Credit Suisse, and through the fear, the price of the insurance has been rising up very quickly. And question is whether this is sustained, as short sellers are not focused solely on Credit Suisse. They've been targeting BNP Paribas as well. Now, is this case actually warranted? If we look at the data, which is the price to book ratio, we can see more banks on the brink of default, which are Deutsche Bank, Credit Agricole, Barclays, and even the Bank of China has worse numbers than Credit Suisse. This is one that is not really a surprise, as we already know that China is having a hard time and it might be getting into a potential real estate crisis with Evergrande. Now, going back to Lehman, when did that one actually fall? Lehman closed its doors in September 2008 and was the massive example and central point of past crisis, as the investment bank couldn't sustain through the crisis. The market started falling heavily after that, as we can see in the chart. The Dow Jones dropped by 40% since Lehman fell and then started to turn around. Conclusion is whether the current case is going to happen again. Some small conclusions we can make that doesn't suit the banks overall is that the yields have been accelerating massively, energy crisis is taking place, currencies are volatile as hell, and all are not really ingredients that are beneficial for the markets overall and banks especially. Yields have been going up by more than 600% in Germany this year and puts a ton of pressure on the markets. As you see in the chart, the yields are dropping quite fast, and that's not surprisingly taking place as the markets are pricing in a reversal in the monetary policy. The Bank of Japan, England and China all are reversing their policy, and especially the Bank of England started quantitative easing again, which was an urgent decision as their yields have been rising massively and the pound has been dropping in value significantly too. It's just a matter of time until the US has to follow through, as their economy is weakening too, and if we want to discuss a potential case of Credit Suisse sustaining or not defaulting, you would want the yields to drop and QE to start, as the Titanic can simply continue moving forward, and the Titanic is essentially our economic system. The economy is weakening as ISM from Monday came in way worse than expected, which is a measure of positive and negative strength on the markets. The expectation was 52.5 and the real number was 50.9, which is a big miss and gave a result to the markets in a positive way on the indices, but negatively for yields in the DXY. US 10-year yields are down 10% already since the recent high. Now, currently, the hype is a lot around this subject and it feels a bit as if social media compared to GameStop is taking control of the entire subject, which can become a self-fulfilling prophecy, but it can also not be expected to see something happening like Credit Suisse right now. Then we're going to see banks fall apart in the coming crisis, that's for sure. But the question is whether we can see it right now or whether people are feared too much due to all the stuff happening in the macroeconomic playing fields, which gives as a result of these topics taking over the spotlight for the markets. I'm in the latter group, which implies that I do not assume we are currently getting a bank falling apart. But once we are going to see that, and it can still be a bank like BNP or Société Générale, the markets are going to have a massive impact, as we already know from 2008. What does that mean for crypto? Well, most likely we'll have a drop taking place massively again. That doesn't mean that we have to get another crash at this point. It can also happen while Bitcoin is resting at 40k, just like the price action we have seen in the COVID-19 pandemic a few years ago, which resulted into the markets dropping by close to 50% on a single day, as that was a black swan. If a bank collapses, most likely we will see crypto fall heavily again, but what will the actual impact mean? Well, this brings you back to where Bitcoin actually started. Bitcoin started in the past crisis due to the fact that Lehman fell apart. The British pound started to fall heavily in the past weeks, and as a result, we've got more people jumping into Bitcoin on that day as people are getting uncertain about their government and their own currency. So that is a use case of crypto, and that's the one we started with essentially. So if we get a bank falling apart, in the short term we're going to endure some pain in terms of price action, but in terms of fundamental growth, the adoption will only accelerate. Now, what are we looking at on the higher time frames with the markets on these topics? Let's dive into the TA. Now, when we're looking at the charts for Credit Suisse and Deutsche Bank, we can definitely tell that it's not looking too great for both of them, as the all-time high for Credit Suisse was $75 and now it's at 4, and in the past weeks we have been seeing it falling down even more as the fear is getting surrounded by the fact that people are expecting it to actually drop or to default, which meant that yesterday we were falling again with approximately 10%. However, the markets have not been getting that story or not continued, as we saw a big bounce up. And the same goes for the indices, who were bouncing up yesterday significantly too. As we can see on the indices here, we have been seeing that yesterday we have got a green candle, and today we are also seeing continuation after we have been sweeping this actual low for the indices. So things are starting to turn around, and we are expecting therefore to continue this strength, honestly, especially since the Credit Suisse, as I said earlier in the introduction, is most likely a topic being surrounded by social media and retail investors, and doesn't really be ground a potential thesis of it falling apart or defaulting. So I'm not saying you should be buying Credit Suisse at this point, but at least the stories are not adding up at this point yet. Yes, of course, we could be getting a default on a big bank if the yields are going to go at this point or are staying at this level. And the Deutsche Bank is here an example. It has an all-time high of 139 and started to fall apart quite heavily in the crisis of 2008, which was around the period of Lehman. And since then, it has been into a very hard time. So if we're looking at the yields, which were the most important one, first of all, the Deutsche yields, which is the 10 years, which have been running up by 600%, which we have been clearly giving in the introduction as well. And now we are down from 2.35 all the way towards 1.8, which means that we're going to get into a territory of a potential top here. We might be getting into a phase where we're actually turning around with the yields after this break run, which essentially is needed for banks to continue surviving, as high yields is not really what the entire world, especially with this amount of debt, wants to see. The US yields are also falling down, which is a good signal. Right now we're on an area of a potential bounce at least, as this can also be traded through technical price action. But if it is going to lose this entire block and this previous high, we are going to nosedive quite fast. So it could be that in the coming period we are continuing the fall, and especially coming days with the data coming out are going to be very important for that. Now when we're looking at the price action, we can definitely tell that the 200 week MA is getting reclaimed on the 200 week or on the total market capitalization for crypto. So it's essentially showing strength, and through that we can argue that if we reclaim and continue the momentum, this could be the bottom. So if the policies are going to be reversed, then it is going to be a case that right now the entries are beautiful, as we have been concluding with the 200 week MA is essentially usually a great period to start accumulating your positions. So in that case, we are looking at continuation here, and we have also been seeing a breakout on Bitcoin taking place in the past few days, also due to the fact that the economic data was worse in the US, and that doesn't really sound or add up with the Credit Suisse story. So we have been saying, yeah, if the Credit Suisse is going to fall apart, or any other bank that is as big as Credit Suisse, it will have a big impact on the market. But if that is not going to be the case, which seems unlikely, as the policy are going to switch towards QE again, as they have space to start using those instruments to strengthen the economy, which means that falling apart is less likely. It can still happen approximately in like 2 years from now, but for now it seems unlikely to take place. In that way, it's very likely for Bitcoin to continue the momentum. And what are we looking at? Well, if you have been watching my live stream yesterday, I said that essentially this was your long entry, couldn't get it. At least it's your long entry if you were not in. Flip of 19.5, run all the way towards resistance at 20.1, in which we are looking at a potential test around 19.6 to hold. If that one holds, we are going to continue towards 20.7 and most likely 22.4. And then if you're looking at the overall scheme of things for Bitcoin, it is very likely that we're going to have a reversal taking place here with a potential bullish divergence on the weekly time frame, indicating that we could be getting even towards 40k if it is towards the first quarter of 2023, because in that way we're going to get a relief rally similar to what we have been seeing in 2019, as all the levels that we have on the upside have not been tested. So Credit Suisse is something for social media for now. It is something you should be taking into your mind or taking into account for your thesis of investments. It could happen that it's a black swan like Corona has been in 2020, but overall, preferably you want to be into longs based on the fact that policies are going to turn around, and that we will be discussing tomorrow even more. Let's get towards the conclusion. This update we've covered the Deutsche Bank and Credit Suisse and gave you a slight introduction in what is actually happening at this point. We've also been watching the TA on the markets, and we have been covering the previous crisis in which Lehman started to fall apart. As a conclusion, you should remain calm, especially if you are into these markets based from your own thesis and you're into these markets for crypto. Then crypto probably is going to fall if Credit Suisse is going to happen, which is unlikely at this point. But once it takes place, you probably are going to feel some pain in your portfolio, and after that the actual adoption starts to take place, and that is essentially where we started with the entire crypto journey. I hope you have enjoyed this update. Make sure to hit that like button, make sure to subscribe and eat. I'll see you again tomorrow in a fresh new update, and on Thursday 7 p.m. Central European time. It's giveaway day, so be there on the live stream. Ciao!